Hello my dear CMA interest students. Welcome to our YouTube channel. Today we are going to revise the IND AS 33, that is earnings per shares. There are two types of EPS which we need to calculate in this IND AS, that is basic EPS and diluted EPS. Then how to calculate basic EPS? To calculate the basic EPS, we need net profit attributed to equity shareholders divided by weighted average number of shares outstanding during the year. Now, how to calculate this net profit? Numerator, right? So, to calculate this net profit, we have to start with profit before interest and tax. From that, we subtract the interest, we get profit before tax. From this, we less tax, we get profit after tax. So this profit after tax, which is available not only to the equity shareholders but also to the preference shareholders. So from this we need to subtract the preference dividend, and after subtracting the preference dividend, whatever profit we get, that profit we call that profit or loss attributed to equity shareholders, right? So like this way we need to calculate the profit. Next, now let's solve one sum. So following, let's say problem number 1, following information has been provided by A Limited. Paid up capital is 1 lakh ordinary shares of 1 rupees each, that is 1 lakh rupees. Ordinary shares means equity shares. Then 20,000 10% preference shares of 1 each, which is 20,000. Gross profit for the year. In this case, they have not given the profit before interest and tax. They have given gross profit. Okay. From the gross profit, we have to subtract the indirect expenses to get a profit before interest and tax, or profit before tax. Okay. Fine. So they have given gross profit, which is 3,50,000, and other operating expenses, which is 1 lakh. So 3,50,000 is a gross profit. From the gross profit, if you subtract the other operating expense, which is 1 lakh, you get profit before tax, which comes to 2,50,000. In that 2,50,000, if you subtract the tax, we get profit attributable to equity shareholders, right? So if you see the calculation of profit or loss, so first gross profit, we subtract the other expenses, we get profit before tax. From the profit before tax, you apply 30% tax, we get 75,000. After subtracting the tax, we get profit after tax, and from this we subtract the preference dividend. How many preference share capital is there? 20,000, and rate is how much, my dear student? 10%. So 20,000 into 10%, which is 2,000. So profit available to equity shareholders will come how much? 1,73,000. Like this way we need to calculate profit or loss attributable to equity shareholders, right? Next, my dear student, what is next denominator? That is weighted average number of shares outstanding during the year. Why we need to calculate weighted average number of shares? Please try to understand, my dear students, right? So we generally have the opening balance of the shares, and during their company may issue some shares, right? And during there might be some buyback of shares. So whenever during the year some transaction happen, so we cannot take the closing balance of the shares. We need to calculate the weighted average number of shares, right? So how to calculate that, sir? Let's take a example. Example number 2, problem number 2, right? Let's see. On 1/4/2022, B Limited has 3,600 ordinary shares. That means opening balance of the shares how much? 3,600. On 31/8, they have issued 1,200. Okay, 31/8 issued how much? 1,200. Then on 31/3, it brought back how many shares, sir? 600 shares have been brought back. Calculate weighted average number of shares. So how to calculate weighted average number of shares? So first of all, opening balance was how much, sir? 3,600. This 3,600 was there in the business for how many months, sir? From 1/4 to 31/8. That means it was there for 5 months, right? So our time factor will be 3600 into 5 by 12, because 3600 shares was there in the business for how many months? 5 months. Thereafter again company have issued 1200 shares. So now as on 31/8, how many shares become, sir? 4800, that is 3600 plus 1200. Now this 4800 shares was there for how many months, sir? From 31/8 to 31/1, that is again 5 months, right? So again our time factor will be, weight will be 5 by 12, correct? So 4800 into 5 by 12, we get 2000 shares. Again after that 31/1, what happened? This 4800 shares was there, but on 31/1, what happened? Company have brought back 600 shares. So now our shares will reduce, correct? So 4800 shares minus 600 shares, so our shares become how much, sir? 4200. Now this 4200 shares was there in the business for how many months, sir? Till 31st March. So 31st March means how many months, sir? 2 months. That is Jan has gone, now Feb and March, so 2 months. So 4200 shares into 2 divided by 12, we get 700. So total if we add, we get 4200. That is called weighted average number of shares. Now whenever we need to calculate what, sir? Earning per shares. So we know a total profit. Let's take example 1. What is the profit available to equity shareholders? 1,73,000 divided by weighted average number of shares, how much, sir? 4200. You will get a EPS, earning per shares. Is that clear, right? So it's very simple, my dear student, right? Okay, after that, my dear student, after that, what is diluted EPS? Diluted EPS means what? Diluted earning per shares are calculated when there are potential ordinary shares in the capital structure of the company. Whenever there is a potential ordinary shares, equity shares in the capital structure of the company. For example, whenever company issue a debenture and company give the option to a debenture holders, we will convert your debenture at the end of the redemption period into the equity shares. So that means our debentures are there, whereas in the capital trust structure, that debentures are eligible to convert into shares at the end of the redemption period. We call that, okay, we call that as a potential ordinary shares, and due to that our earning also will get diluted, and hence we need to calculate diluted EPS. Today it may not have any impact, but in future it may have the impact in our what, sir? EPS, right? Okay, so like this, what is there, sir? Number 1, conversion of debenture into shares, conversion of preference shares into equity shares, or share option, share warrant. These are the potential ordinary shares in the capital structure of the entity, right? Okay, after that, my dear student, let's take one example. First of all, let's see, D Limited had outstanding ordinary shares of 10 lakh rupees or 10 lakh shares on 1/4/2022. Profit for the year is how much, sir? 20 lakhs. So basic EPS what, sir? Basic EPS will not have any impact of the potential ordinary shares. So basic equity we have to calculate normal way, your net profit divided by number of shares outstanding. So how much is the net profit, sir? 20 lakhs. Equity shares how much, sir? 10 lakhs. So basic EPS become 2. Right. Now how to calculate diluted EPS? Whenever we need to calculate diluted EPS, we have to adjust our numerator as well as our denominator. How to adjust, sir? Let's focus. My dear student, whenever we issue debenture, right, when we issue debenture, we need to pay the interest to the debenture holders, right? When we pay the interest to debenture holders, what will happen to our profit, sir? Our profit will reduce because we need to pay the interest. Interest is an expense. When we pay the interest, our profit will reduce, and if your profit reduce, we have to pay the less tax, correct? Yes or no? Now what is happening? Now these debentures are there. The debenture are converted into equity shares, right? When we convert the debenture into equity shares, we don't have to pay what? Interest, correct? Number 1. When we don't have to pay the interest, what will happen? Our profit will increase to the extent of this interest, right? And when your profit increase, what will happen? Our tax also will increase because we have to pay extra tax to the government, right? So that impact we have to give in the net profit calculation, right? Number one. Number two, whenever we calculate weighted average number of shares, right? When we convert debenture into shares, what will happen? Our number of shares also will increase. So we need to increase our denominator also. How to do that? We are going to discuss in the problem number 3, right? Okay. So first of all, how many, let's calculate first net profit. How much was the profit, sir, before? 20 lakhs, right? So 20 lakhs was our before, right? Before giving the impact of interest. Now in that we add what, sir? Interest. How much is the interest, sir? How much is debenture? 20,000 debenture of 100 each, that is 12%. So take your calculator, 20,000 into 100 into 12%, we get 2,40,000 as a interest. So 2,40,000 will add the interest in our net profit. Now what will happen? Our profit increase by the interest component. If your profit increase, we have to pay the tax, more tax. So subtract the tax. So minus what, my dear student? Tax. How much is the tax percentage? 30% tax. So let's subtract the tax. If you subtract the tax, which is 72,000, so 2,40,000 minus 72,000, then we get total how much, sir? 21,68,000 is a net profit. That is 20 lakhs plus 2,40,000 minus tax 72. We get how much, sir? 21,68,000. This is the profit after adjustment of the interest and what, and the tax. Okay, fine. So we have calculated numerator now. Now let's calculate the denominator. So what is the denominator, sir? Calculation of weighted average number of shares. So how many shares are available? 10 lakhs. Now we are converting the debenture into shares. What is the ratio, sir? Conversion ratio. They said each debenture will get 10 ordinary shares. How many debenture we have? 20,000. So 20,000 debenture into 10 by 1, 2 lakh shares they will be converted. So how much is the total shares? 12 lakhs. Now in this case, my dear student, please understand, we are not applying the time factor. Why, sir, we are not applying the time factor? Because they have not given the date of issue of debenture here, right? If the date is given, we may have applied here the ratio, or we may have applied here what, time factor. Is that clear, right? So what is our diluted EPS here? 21,68,000 divided by 12 lakhs, we get 1.806 or 1.81, right? So I hope this is clear to everyone, right? Let's come to the one more example, problem number 4. Consider the following information given by F Limited. Net profit for the year ended 86,50,000. Paid up capital is how much? 25 lakhs. Equity shares obtained each 1 lakh. 10% or debentures 100 each were issued on 31/9. So here, my dear student, please try to understand here what happened. They have given the date. So when date is given, we need to apply the time factor. Okay, tax rate how much? 30%. Conversion ratio, that is for one debenture they will get 10 ordinary shares. Then calculate the basic and diluted. Basic is very simple. How to calculate basic, sir? How much the net profit? 86,50,000 divided by 25 lakhs, we get a basic EPS, that is 3.46, right? Net profit available to equity shareholders divided by the weighted average number of shares outstanding during the year. Now how to calculate diluted? So I told you two things we need to calculate. First, net profit calculation, and number 2, weighted average number of shares calculation. Let's calculate the net profit. So first, what is the net profit given? 86,50,000. Add debenture interest, which is 1 lakh debenture of 100 rupees each into 10% into 6 by 12, because we are issued debenture on 31/9. Are you getting my point? So time factor will be what? From 110 to 31st March, 6 months. So we get 5 lakh as the interest on debenture. Tax on interest on debenture, which is 1,50,000. How we calculate is nothing but your 5 lakh is the interest on debenture into how much percent, sir? 30% is a tax, 1,50,000. So total we got how much, sir? 90 lakhs as a net profit. Okay. Now working note number 2, calculation of weighted average number of shares. So how many shares was there? First, 25 lakhs. opening balance. Then how many debentures are converted into shares? We was having 1 lakh debenture and ratio was 10. So 1 lakh into 10 by 1. But now we need to apply time factor. How much is the 6 by 12? So it is 5 lakhs. So total number of shares come 30 lakhs. You may ask, what about this 25? This 25 was there at the beginning also and at end also. So there is no change. Even though if you want to apply time factor, it will be 12 by 12. So there is no change. Is that clear? So total our number of shares become 30 lakhs. Your net profit was 90. So 90 lakhs divided by 30 lakhs is equal to how much, sir? 3 rupees is a diluted EPS. Is that clear? Yes or no? So always remember, my dear student, whenever debentures are converted into shares, you have to give the impact in calculation of net profit. Number 1, add the interest and less the tax on the interest. If there is a time factor given, apply the time factor on the interest calculation. Same way for calculation of weighted average number of shares. Okay, next one, my dear student, in company sometime there will be the share which are converted into share warrant, or sometime company may give the employee an option. Which options are? Employee stock option, that to purchase the shares after completion of the vesting period, right? ESOP, you might have studied this one, right? Okay, so now what happens, whenever these options are available with a company, that time they need to calculate again diluted EPS, because in the future their EPS going to get diluted. Okay, so how to calculate? Whenever there is, remember my dear student, whenever there is an option or warrant which are converted into shares, that time you should always consider the portion of the shares which are issued other than cash, right? That means whenever there is a ESOP option is given, company generally give the ESOP to the employee at a less than market price, right? For example, if the market price of the share is 25 and company give the option to employee to purchase the shares as 20, so there is a 5 rupees a portion of what? Consideration other than cash. This is not a cash, right? Is that clear? So this portion alone we should include for the purpose of calculation of weighted average number of shares. Is that clear? Right? For a net profit there will be no change whenever there is a warrant or options. Is that clear? Okay, so my dear students, now basic EPS very simple. E Limited had 10 lakh shares and net profit is how much, sir? 24 lakhs, and they have the fair value how much? 20, whereas the option price how much? 15, and company has given how many options, sir? 2 lakh options. Now 2 lakh options company is going to give, but in that how many options company has given other than cash? Is that clear? Other than cash, what is the number of shares that we need to add in calculation of weighted average number of shares, right? So basic is how much is the net profit? 24 lakh. Your net number of shares is 10 lakhs, or EPS become how much, sir? 2.4. Next, diluted EPS, our net profit is not going to change due to the option or warrant. What is going to change, sir? Your denominator. How to calculate that? Just focus. So calculation number of shares outstanding, right? How to calculate that? Or opening shares 10 lakhs, 2 lakh option we are issuing. We need to calculate how many options given other than cash. 2 lakh option is given. In that 2 lakh, we need to calculate that if you pay 15 rupees, you will get 1 shares. But what is the market price? 20 rupees. So 15 by 20 into 2 lakh, you will get the shares issued for consideration of cash. So total shares minus shares issued for consideration of cash, you will get a balance amount which is share issued for consideration of other than cash, which is 50,000. So 10 lakh plus 50,000, you will get 10 lakh 50,000, which is weighted average number of shares. So 24 lakh is a net profit, divided by weighted average number of shares, you get 2.285 is a earning per shares, which earnings are diluted earning per share. Is that clear? So I have taught you, if the debentures are converted into shares, how to calculate diluted EPS. I have taught you, if the shares, warrant or options are converted into shares, how to calculate what, sir? Our diluted EPS. Is that clear? Now last portion is that is right issue. So what is right shares, sir? Right shares are the shares given by the company to its existing shareholders below the market price. If the market price is, let's say, 20 rupees, company will give that shares for 15 rupees or 10 rupees, right? So whenever shares are given at below market price, there is a portion of shares issued other than cash, like that is called bonus, right? So bonus component will be there. That bonus component we need to eliminate. Is that clear? So how to calculate? Always remember, whenever right shares are there in the question, you need to calculate two things. Number one, right factor, and number two, theoretical x right price. Right factor, how to calculate, sir? Right factor, why we calculate? We calculate the right factor to know the component of bonus, right? So how to calculate right factor, sir? The right factor is nothing but the fair value of the shares before right issue divided by theoretical x right price. Always remember, fair value of the share before right issue will be given in the question, but theoretical x right price will not be. Theoretical x right now, as per the theory, after the right issue, what will be the price per share? We need to calculate that. That will not be given in the question. Okay, so how to calculate that, sir? Let's see. So how to calculate theoretical x right price? So first of all, what is the fair value of the shares before right issue, and how much amount you received from the right issue? So what is the value before right issue plus how much amount you received from the right divided by total number of shares after the right issue. That is, before right issue, how many shares you issued as a right shares. Is that clear? How to calculate, sir? There are different options are there, but let's see different alternative also there. So this is the easiest way to calculate. First of all, let's read the sum now. My dear student, Y Limited, please listen. So Y Limited supplies the following information. Net profit they have given 2122 and 2223. Okay. Number of shares prior to right issue 5 lakhs. Then the term of issue is what? 1 new shares for every 4 shares. That means if you have 4 shares, you will get 1 right shares. Okay. Right issue price how much, sir? 20 rupees. No problem. Fair value of 1 ordinary shares immediately prior to exercising the right, how much, sir? 20. That means before the right issue, what is the price per shares? 25. Right shares was issued on 36. Very good. How many, which date, sir? 36. Calculate the basic EPS. How to calculate? For basic EPS, how to calculate is very simple. For 21, 22, our net profit is 10 lakh divided by number of shares 5 lakh 2 rupees basic EPS. But whenever there is a right issue, we need to apply the right factor to calculate the basic EPS. Now, how to apply the right factor? Please focus. Again, I repeat, whenever there is a right issue, there is no change in the numerator. Net profit will be same. What will change, sir? Your denominator is going to change. So our net profit is how much, sir? 15 lakhs, which is given in the question. How to calculate number of shares? That is what we are going to see now, right? So please focus. So my dear student, so let's calculate. So what is here? We need to calculate what first? Right factor. To right factor, we need what? Theoretical x right price. How to calculate theoretical x right price? Now focus. So what is the fair value before right issue? So they said if you have 4 shares, you will get 1 right share. So we will calculate what is the value of these 4 shares before right issue. So 4 shares, 1 share value is 25. So 4 into 25 plus what is the value received from the right? For if you have 4 shares, you will receive 1 right shares. So 1 right shares, what is the value? 20, which is given in the question. The total value after the right issue divided by total number of shares. How many shares was there total? Before it was 4, you receive 1 right shares, so it become total 5. So it will be 100 plus 20 divided by 5 is nothing but 24 is the theoretical x right price. Is that clear? Now my dear student, let's see what is the fair value before right issue? 25. As per the theory, after right issue 24. So my x right factor become how much? 1.04. Now we need to calculate what? Weighted average number of shares. How many shares was there before, sir? 5 lakhs. Number of shares issued on right, how much? 1 by 4, that is 1 lakh 25. So total shares become 6 lakh 25, but you should not take as it is. We need to apply the right factor. Sir, how to apply the right factor? Please focus. How many shares was there? 5 lakh. When we issue right share on 36, that means April, May and June, 3 months. So into 3 by 12 is a time factor, and before that we should apply the right factor, because after that you issue the right shares, then it will be a normal, but before the right issue there is a application of right factor, where the right factor is 1.04 plus. Next, our total shares become how much, sir? 6,25,000 into what's a 9 by 12. So after right issue, our shares become 6,25,000 into 9 by 12. So your total shares become how much, sir? 6 lakh, right? So how much is our basic EPS now? 15 lakh divided by 6 lakh, we get 2.50 is the EPS. But whenever the right issue, we need to restate our EPS of the previous year, because that is a requirement of the IND AS. So how to restate, sir? Now, how much was our net profit of the previous year? 10 lakhs. How much is the number of shares? 5 lakhs. Multiply with the right factor, you will get a basic EPS, that is 1.923, which is a restated EPS, right, my dear students, right? This revision is more than sufficient for your exam preparation, right? I have covered all the types of questions in this revision lecture, so please watch this revision lecture, my dear students, okay? And if you have not subscribed our YouTube channel, please subscribe our YouTube channel for more updated video, right, my dear student? So okay, my dear student, it's time to say tata bye bye to everyone with a beautiful smile on your beautiful face. Take care, my dear student. Study well. Bye bye.